Hi everyone, let's continue with our revision of audit of banks. Please tolerate my voice for today. It is actually I have a sore throat, but we'll continue with the revision sessions. Okay, so let's see this please here. Now we are seeing right now the answer in relation to computation of drawing power. So you have this answer called computation of drawing power, which is an important one, in which you should know how the computation of drawing power is done. So in this, basically, you will have to understand that there are two parts. One is in relation to the theoretical answer, which is here, and the other is in relation to computation, which is basically here. Okay. So I'll take you through both. So please see here, very, very simple part. Let's start. Please see here. First of all, whatever is the sanction limit and the drawing power that the bank has finalized for any borrower, it should always be within that drawing power or sanction limit. And if it exceeds, then we should inform the higher authority on an immediate basis in the bank. Okay. The bank normally will take the computation of current assets, and current assets basically mainly the bank will look at the current stock statement of the organization of the borrower. In case if it is a large borrower, we should check the current stock statement which is most recent, that is which is there within 3 months. In fact, if we check a older current stock statement, then it is not proper. It is they have written in the module that it is irregular, so it should not be considered. So the bank should check the stock statement, bank should check the quarterly reports basically, bank should check the annual report, bank should check the monthly stock statements of the borrower. Further, we should check the extant guidelines, which is basically the policies made by the board of directors of the bank. So the auditor will check whether that has been followed or not. Stock audit is compulsory if the exposure, it means the risk after giving the loan is more than 5 crores. So if you have given a loan to a borrower of more than 5 crores and if the borrower is not going to pay you the amount, then there is an exposure of more than 5 crores. In other cases also, whenever the auditor recommends, you should get the stock audit done. Okay, 1 minute. We should get the stock audit done. Further, in case of non-lead banks, in case of consortium of loan, non-lead bank, we should take the stock audit report from the lead bank. From the lead bank, this in this I had given a example in which we had SBI, in which we had HDFC Bank, in which we had Axis Bank. So this example you must have done in class. You can go through it. Finally, they have given here that comments of the auditor are very, very important. Okay, this completes your answer in relation to computation of drawing power, the theoretical part. This construction business is not there in the new syllabus, it is there in the old syllabus. This point they have removed in the new syllabus. Okay, let's go further. Now if they ask you a question in relation to computation of drawing power, that is a numerical question, this is what you have to do. You have to look at the stock covered under insurance, you have to take that value, you have to reduce the creditor's value, you will get the paid stock, the stock for which we have already paid. You will reduce the margin from it, that is the percentage of the paid stock. This the bank will not be ready to give as the borrowing, so this much we have to reduce. You will get A as the answer. Okay, next we'll take the total debtors here. From debtors you will see debtors which have exceeded the credit period which have been given to them. So debtors, suppose you gave a credit period of let's say 90 days, and debtors which have not paid since 90 days, that you have to reduce. Debtors within the credit period, you will get the subtotal here. You will again reduce the margin because the bank will again not give you the borrowing amount regarding the margin part, and you will get the B subtotal here. So A plus B is the total drawing power limit that the bank will finalize. This they can ask you a question in the examination. So this format in which you need to remember, it's a very simple one. It's a very logical one, so that you can easily implement it. Simple. Okay. That completes in relation to computation of drawing power. Now I'll take you to the beginning of this chapter where the other answers are covered. We'll do one by one, and I'll help you with this. Let's go for it. Now, very simple answer. RBI, basically RBI is responsible for which matters in relation to a bank. So RBI is responsible for, they have said, for comprise bank and non-banking financial institutions also. RBI is responsible for them. So for banking functions and NBFC, non-banking financial functions also, RBI is responsible. So RBI will set the norms and the rules for them. Second is the monetary and the credit policy for the country, the RBI will set. And finally, regulating the activities of commercial and other banks, the RBI will set. What are the functions of the RBI? In first is issuance of currency, regulation of currency issue, acting as a banker to the government, that is central and state government, and acting as banker to commercial and other types of banks. So the RBI acts as a banker to them. Okay, so whenever they are in need of funds, RBI will provide the funds to them. Okay, let's go further. What are the various types of banks in India? Very simple. Again, it is a area that you should read very, very carefully. Let's see this. Commercial bank, regional rural banks, cooperative banks, payments bank. You'll get the other area that is development banks and small finance banks. Here, no, these examples which they have given, see, Equita, small finance bank, AU, small finance bank. Here also you can see your IFCI, IDBI, all these areas all these areas become very, very, very important for you to understand. Okay, that is basically this part which is given here. Okay, so you again you will see that examples here: Punjab Gramin Bank, Tripura Gramin Bank, Allahabad UP Gramin Bank, Andhra Pradesh Gramina Vikas Bank. So all these examples become very important because if they can ask you, Punjab Gramin Bank is a type of, and you have to remember it is a regional rural bank. So just be careful with this example which I say can ask in MCQs. Let's go further. Now we had done this question called what is the bank audit approach. So in that we had seen what are the common questions and steps to be kept in mind while undertaking the control activities. So in this we had done the meditation story. So if you remember that, first is this who performs the controls and the light on his head, that is requisite knowledge and authority. Then he takes the print. So evidence is generated. Then after that you have 5 times he does that. So frequency. So the first point is when and with what frequency, and is the frequency enough. After that you have that person goes and first makes a file. Then after that he writes on the file, he has to maintain it for let's say 8 years, and then he puts a message in the to the auditor that is available for auditing purpose. Then the colleague asks the bank person that why do you meditate, so you understand why is the control being performed, what type of errors and errors are prevented or detected. Then you have how the control is performed, the control activities. Remember the feather is what bypassed, then bypass if any is detected. Remember this action, bypass if any is detected. Okay, then you have how are the exceptions or deviations resolved, and finally what is the time frame for resolving the exceptions or deviations. This is how you do the bank audit approach. Simple. Let's go further. Now we have the next area called form and content of financial statements in relation to the audit of a bank. Okay. So in this we see, you can see here the nationalized banks here, the State Bank of India, subsidiary of State Bank of India, regional banks, the Banking Regulation Act in relation to making the financial statements is applicable to them, so that they have to follow a section called section number 29. Okay. Next, we have every banking company in India will make the balance sheet as per Form A and profit and loss account as per Form B. This is as per the third schedule. You can see here the third schedule to the Act. Act here means the Banking Regulation Act 1949. Okay. Banks always have to follow the accounting standards under section number 133. Okay. Let's go further. Next, uh, the audit of banks is audited by a person duly qualified to be auditor of a company also. So you understand again, a CA in practice will do the audit of banks. So the eligibility qualification and disqualification for a CA will be the same for a bank also. Okay. Let's see further. Now, appointment of auditor in any bank, this is a simple answer. So you have to remember, in nationalized banks, the board of directors appoint the auditor after approval of RBI. In State Bank of India, CG plus C&AG, they appoint the auditor. So in fact, the C&AG in consultation with CG appoints the auditor of the State Bank of India. In SBI subsidiaries, SBI appoints the auditor. So SBI appoints the auditor. In regional rural banks, the bank appoints the auditor after the approval of CG. In other banks, shareholders in AGM after the RBI's approval, they appoint the auditor. The remuneration of the auditor of the nationalized banks and State Bank of India is finalized by RBI in consultation with CG. In consultation with CG. So RBI will speak to the central government. Okay. Let's go further. Remuneration of auditor is the same, so it is fixed by the general meeting of the bank. Next is normally for other banks. Powers of the auditor remains the same. See, they have given the same powers as those of the company auditor. And as you know very well, the power of the company auditor is given in the section of powers and duties. That is section number 143 of the Companies Act. Okay. That is the powers and duties of a statutory auditor. Let's go further. The auditor's report in relation to the audit of bank, especially in the case of CR, nationalized banks, and also in the case of State Bank of India. For these two banks, remember, the auditor has to give a report to CG regarding the bank. The what areas will it cover? It will cover these areas we see here, where the balance sheet and profit and loss account give a true and fair view. Basically, whether the financial statements give a true and fair view. Second, whether transactions that the bank has done, whether they are in the powers of the bank or not. whether the branch returns have been received properly or not, and any other matter that the auditor considers necessary, the auditor can mention in the report to CG. Simple. That is basically this part. Let's go further. This is a simple area. You can go through it. You can read it. Come to this part, LFAR, long form audit report. Long form audit report, you have to remember a date, that is, it should be made before 30th June every year. So LFAR should be submitted before 30th June every year. Simple. Let's go further. Reporting to RBI regarding the CA's functioning. Now here you can see if an accounting professional, you can see this accounting professional. So RBI has given a warning to accounting professionals that, see, accounting professionals, whenever they are doing the auditing, and if they find something which is susceptible to be fraud or fraudulent activity or any act of excess power, that the bank manager is, using his power in a wrong manner, or he smells any foul play, means he feels something is wrong in the bank's functioning, he should refer the matter to the regulator, that is RBI. That is what this area mainly mentions. So this is a RBI circular directly for those in the accounting and auditing profession. That is basically a CA. Simple to understand this area. Okay. Let's go further. Now we enter the last part, that is in relation to conduct of bank audit. For this, I have already made a separate video on YouTube. I will put the link in the description to this video, and you can watch that link. In that, proper explanation regarding this matter is given, and this area is covered in 50 minutes, 50 minutes. But you get a proper grip regarding this matter in a very nice manner. So I'll quickly just help you with the revision part. Please see here. First, what given here is, please see here, that we have to do the initial consideration while doing the audit of banks. So initial consideration basically means what? We should not be indebted to the bank, first of all. So in the initial consideration, they have said that we should not be indebted to the bank of which we are going to do the audit. Second, we should not be involved with any internal assignments of the bank in the same year. So if we are helping the management with some work in the same year, in that year we cannot be the statutory auditors of the bank. Third, we should help the bank we should do our audit planning. This SA 300 is audit planning. And while doing the audit planning, we should keep these two standards in mind. That is 210, that is agreeing the terms of the audit engagement, and SA 220, that is nothing but quality control. So these two things have to be kept in mind. In quality control, especially, you will keep a focus on the acceptance of the client relationship, because you are going to start the audit of bank for the first time with a particular bank. Next is, you will keep in mind SA 510, you know very well, that is opening balances, because you are doing the audit for the first time. For this client, you will be checking the opening balance, whether the opening balances contain any material misstatements or not. Okay. Next, we'll check clause 8 of part 1 of the first schedule, which says that a CA should communicate with the predecessor auditor in writing whether he can, whether he should take up the audit or not. And he'll take the recommendation of the predecessor auditor. The predecessor auditor, if he says that, see, the client did not pay me the fees, then it is a warning signal for the existing auditor who has joined the audit currently. And he'll get a warning that he should maybe not take up the audit work. That is clause 8 of part 1 of the first schedule. That where a CA who is just appointed to do the audit work, he should communicate with the predecessor auditor. Okay. Finally, the auditor should consider the engagement risk. Auditor should have a good team in his place, that is T, and U is understanding the entity and its environment. Okay. Auditor should assess the risk of material misstatement. Auditor should test the control, that is internal control checking. Auditor should check the accounting process of the bank, that mainly involves checking the manual or the IT process that the bank has set in place. Okay. Next is, the auditor should check the risk management process. Risk management process means how is the bank looking into the various matters where risk is involved. So first of all, this basically means from the top. Look here, this basically means from the top. From the top, the TCWG should have oversight over the bank's internal control process. The company should have a system where the company is controlling the activities, and every activity has a step-by-step process to it. For that, in today's times, for accounting purpose especially, reliable information system should be there in place. Reliable IA should be there in place. Risk identification, risk measurement, risk monitoring, the bank should do continuously. What is the risk? Is risk identification. Measuring the risk, how much damage the risk can do, is risk measurement. And monitoring the risk to see whether the risk, after we have put the procedures in place, whether the risk is still at a very high level or it has reduced. That is what we are checking. That is risk identification, measurement, and monitoring. Finally, we'll monitor all these activities and ensure that everything is working well in the bank. That is called risk management process. Important answer. Okay. Next is engagement team. In our engagement team, we'll have more experienced people who will share their knowledge. We'll have the team members who will exchange information on the risk, and there should be a very good understanding between the more experienced persons and the team members who are there in the audit team. So there should be a good understanding between the two. Next, what matters should be discussed by the engagement team members? They should discuss the matters regarding FREPA. FREPA is F is fraud, R is risk regarding any engagement risk, pervasive risk, specific risk. They will discuss these matters. Regarding errors that have already been identified in the past, they will discuss those. Errors which may happen in the future, which have a chance of happening, that also we will discuss. P is professional skepticism and A is uh, anything that I come to know is going wrong in the bank, I should alert others. So A is alerting others in my engagement team. Okay. Next is I should have an audit strategy in place, audit plan should be there in place, audit memorandum should be there in place. Audit memorandum in normally means a summary of whatever you have planned in depth. Sometimes the plan can be very elaborate. So you want the plan to be in concise format, and that concise format is called memorandum. So in this you will mention all the risks that are there. You will mention what risk assessment, what response to risk are you planning to do to manage those risks. All these things you will write in short. That is called memorandum. Next is auditor will keep in mind materiality. He'll look at whether the bank is a going concern or not, and whether there are any matters of fraud in the bank. Auditor will look at the specific risk. Auditor will look at the outsourced risk. Auditor will ensure that there is a proper response to risk that is given, and whether the bank has dealt with the risk properly or not. Next, auditor should see whether stress testing has been set up by the bank properly. There is a requirement of RBI. Auditor should see whether Basel III framework is there in place or not. In the class, I told you to watch a few movies which really help you to understand the 2008 loan crisis in USA. And based on that, and after that only, the Basel III framework came into the picture. And Basel III framework is now a very standard requirement for the banks to follow at the time of giving of loans or giving of advances. Finally, the auditor should review the reports that are there. And this review the reports has a separate answer. I'll show it to you. You can see here, first is the previous auditor's report, then you have the internal auditor's report, then you have the charge handing over report. Okay, charge handing over report. Then you have the internal report of the bank, the internal inspection report of the bank, the RBI's inspection report, and finally, when a loan is given to a borrower, we take a security from the borrower. This security, the bank should keep checking regularly whether there is any erosion in the value of security. Correct? So the bank should keep checking whether the value of the security is intact and it has not fallen by too much level. That is called verification of security report. This also the auditor will go through. Comfortable till here? Okay. Now this completes our elaborate revision in relation to audit of banks. In this, the students who are my students will find it very, very comfortable because we have used these diagrams to learn. Students who are not my students, don't worry, you can revise using these. These are completely module based, so it gives you confidence while revision. I wish you all the very best. Take care. See you. Bye.